Hey everyone, this is going to be the first video of chapter 1A in the series Market 0 to N, and today I want to talk about trading versus investing, which is right for you. Now I'm going to get more into depth in the rest of the videos in this chapter, but essentially there's a huge difference between being a trader and investor. And many people, including myself, will use them interchangeably, but it is important to know the definition so you can define yourself and figure out what you really want. So, trading is typically a shorter time frame thing. You might be spending more time on your screen, whereas an investor, it's generally more long term, and you might even forget the password to your brokerage just because you're not logging in that often. So, with that being said, a lot of people will say trading is, you're trying to capitalize on mini price movements. And with that being said, it's very risky. Most traders lose. Investing, people will say, well, you're trying to own part of a business and it is less risky. Now, I don't really agree with those definitions, but I guess it is important that you know the consensus on the definitions. Now, with the idea of short term versus long term, you'd think that short term is more risky, it's potentially more rewarding, and long term is the opposite. In some ways, that is definitely true, but in some ways, it's not true. And the reason I say that is because on a long enough time frame, everything goes to zero. So, that being said, theoretically speaking, long term investing is actually the worst. Now, we do have index funds which are naturally adjusting as they have their committees. So it's not really holding one company till death because it'll kick the company out and let a new one in. But the point still stands, generally speaking, that long term, you are going through the whole life cycle of the company. So you're going to see those great growth phases potentially, but you're also going to see the death. So on a long enough time frame, it's actually extremely risky. Whereas short term, the idea of short term being risky is true, but you can define your loss, define your prices. And with that being said, you only lose at the level you put some sort of stop loss. So it doesn't necessarily need to be risky. With long term investing, people are typically looking towards the business, whereas trading, a lot of times, you're just looking for events, catalysts, or some sort of technical setups. Neither method is necessarily better than the other, but I think the main issue with investing is that people think a good business is a good stock, and sometimes that's just not true because assets fluctuate wildly, and a lot of times a great business can see a decline that's irrational, and a great business can rise too much to the point where it's irrational. So you can really invest in a great business that just keeps growing for a decade, but it might just be so overvalued that it just doesn't have any room for the multiple to expand. So I guess that's one thing to clear out of your head, that a good business does not necessarily mean a good stock. And with that being said, that causes a lot of difficulties in investing because I think most people are actually capable of picking out good businesses. But why a lot of people cannot succeed in beating the market is because you can pick out a good business and that just does not mean it's a good stock. So, and you're not necessarily an investor just because you hold something long term, nor are you necessarily a trader just because you look at a chart. You can be a mix, you can be an investor that's still doing your technical analysis and still making the occasional trade when it's applicable, because you might get into a great business long term with the idea of it being long term, and then all of a sudden it doubles in a few weeks, and you're saying, well, I want to be in this for 10 years. It's a great business. That's how long I think it's going to grow, whatever it is. But once the price changes that much, it may be irrational to still be in. And you might have done some sort of net present value calculation, right? And after it's ran up astronomically in a couple weeks, it's a different story. So you can still be an investor and end up doing a trade on something that's logical. And if you're a trader, if the chart is adequate and you're maybe a swing trader and it keeps making its higher highs and higher lows, you might be in something for a year and you might only have been in it to trade, but you might end up being in it for a year. So don't be too fixed up on the definitions. But if I was to dumb this down a little bit when you're trying to think about this, I think largely it should be up to your passion about trading and investing. Now, they have constraints, and I'll get into that in later videos, but you should choose what you're more passionate about. If you find yourself enjoying technical analysis and just looking at charts, I think you should drift toward trading. Whereas if you enjoy really trying to, model the free cash flow of business or something, I do think you should shift toward investing. Now, I do believe the best balance is in the middle, and if you can, to really, really succeed and have the best possible returns, I don't think you should skip out on either of them, but definitely for most people, weigh out a little bit what you really like and just kind of start there and, maybe learn the other one eventually later, but focus and really specialize on something that you enjoy. And another thing that you should probably ask yourself is, are you comfortable being in the market and spending this time to try to get more returns? And do you want to get returns quickly? Well, in that case, if you're willing to put in more effort, more active time, in hopes to get better returns, you might want to stray to trading. If you hardly want to look at your stocks, make a couple solid investments every year or maybe every few years and just let it sit, you should probably look at investing. And generally speaking, you will be building slower returns that way, and it makes sense. You're just doing a lot less work. Like if you're thinking about time involved, in some ways, even though with investing's less returns, on a time basis, it could be much greater. So that's something you also got to ask yourself. Do you really want to put in the effort? Because trading is very complicated. You're against algorithms, you're against quants. There's a plethora of people that are probably putting in 80 hours a week. And if you're trying to waltz in and put in your 1 hour a week, or perhaps even less than that, it's going to be really hard to win. Whereas with investing, there's a lot of very passive players that are holding for a long time. So joining them is probably not the most competitive thing. Another thing you might want to ask yourself, are you a person that's very patient? Or are you a person that really has kind of a jittery finger and you always want to do something? If you're very patient, then maybe investing's good for you. If you're the person that must act on each instinct or just always do something, whatever it is, then it's probably going to be very hard for you to stick to your investments. In that case, you might have no choice but to be a trader. But, people do change, people learn their lessons. So you don't necessarily need to lock yourself into one of these forever. But early on, just try to understand yourself and pick what suits you. Because I can assure you that if you try to pick what's not suitable for you, you're going to have a much harder time starting up. And in this game, the cost of starting up is your time and your money. So it's not really worth, overdoing it in a negative way. But anyway, that's all for this one. I will get into more detail of how you can explore yourself, whether it's about, really going into depth on activeness, passiveness, short-term, long-term. And, you might have your situation. If you're retired, you're in your youth, you're in your middle age and you're working full-time or you're working part-time. And I'm going to try to help out in just general guidelines on how you can understand yourself. But yeah, that's all.